Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, March 7th, 2011. Well, folks, the market's gapped up today only to have a sharp sell take place. We are still seeing the sharp selling taking place at this time. Again, hours after the open, we are trading at around 1 p.m. Eastern Time now as I do this video live, and the markets again had that initial one bar up here. Since then, it's basically been straight down. Now, what's the cause here? What's going on? Is it oil? Is oil now at new highs? What is going on here? Well, ultimately, folks, oil is not at higher levels than it was pre-market this morning, yet the markets continue to get sharp selling. Why? This is the key crux, and this is something that I've been talking about to my premium members in the Research Center and in the Intraday Stock Chat, and this is something that, again, you want to join and take that free trial so you can gain this knowledge. But it looks more and more to me like you're starting to see the markets worry about the end of QE2. Remember, the markets always look forward. There's a few months out, and the market starts to look on the horizon. And what we're seeing now, especially after the jobs report last Friday, is that jobs are now coming back. Economic news is strong. Inflation is going to be tearing higher because of gold, silver, and oil, especially based on the Libyan situation in the Middle East. Therefore, it's very unlikely to see any more QE policy, quantitative easing policy, after QE2 ends in June. And the markets now are freaking out. Why? Because the market is like a drug addict that's on drugs. And again, they've been getting it from the Fed more and more, billions a day. In other words, we've been seeing POMO 6 to 8 billion a day basically, which again will continue for the next couple months, but eventually that's going to go away. And the markets now, as a forward-looking being, they're saying, wait a minute, what's going to keep us up at that point? The economy, chances are, will sputter a little bit at that point, maybe not grow as quickly as it's growing. Yes, it hopefully will continue to grow a little bit, but not with the help of the Fed, obviously, behind it. And I think that's what you're seeing here because, again, many people may say, well, what about the USO? Isn't oil pushing up today? Well, yeah, it's a higher, but the USO is only up 34 cents. And really, in all fairness, the USO opened at the highs of the day, and we've never really taken out that high pivot. So you can see right there that the markets have gone like this, while oil's just chopped sideways around the levels of the day. So again, that's clearly showing that it's not that oil's continuing to go higher minute after minute, day after day here, especially not in the intraday setting we're in right now, and there is some other work going on here, something else worrying the markets. And again, in my opinion, we're now seeing that aspect of the markets saying, okay, now what's coming after QE2? We're a drug addict. We're going to go into withdrawal if we don't have something, and they don't, folks. So again, very, very interesting. In addition, gold and silver are both having solid days today. The GLD is off the highs of the day as well. Silver's off the highs if we look at the SLV. Here's the SLV. Interesting little open, good surge up, and then a retrace back down. There's a nice little bear flag here that's starting to play out to the downside. If you hit the 50 moving average later in the day, that's going to be a good little long scalp, in my opinion, on the SLV. But nonetheless, it's interesting to watch here because silver, if it closes down around gap fill, if by some chance it gets all the way back to the flat line, that could be a very big reversal day. And the reason why I say that is because you opened strongly higher, pushed up even more, and if you were to reverse that entire move, that actually would be a significant little possible top in on the SLV. We will watch that in the intraday stock chat this afternoon and in the nightly video tonight. I will discuss that in depth, all right? So stay tuned for that. Again, you can take that free trial of the Research Center, folks. Everything listed under the Research Center in the Money Stocks is included in that Research Center. You get the 1 week free trial. You might as well utilize it. You can even take the chat room if you're not working during the day, and you can be in the chat for an hour or two. Enjoy the chat. It's a great learning environment. You can ask questions. You'll see the charts live and everything. All right, let's go to a couple other things. Let's go back to the USO here. Now, the USO is on the pivot top here, and this is going to be something that we're going to watch because if oil does break out higher, that will add more fuel to the selling in the market. So watch that very closely. In addition, I made a big call last week on a double bottom in the dollar, saying that I am now slightly bullish or bullish on the UUP, which is the dollar ETF. Why did I make that call? Because look at this double bottom here from November right to this pivot point right here. Look at the dollar today. It opens right on that double bottom and pushes higher. So you're seeing the dollar inching higher, which is also not necessarily something the market likes to see as well. And based on that, that's also keeping the market under wraps. Now think about it logically. The dollar's moving up. Why is the dollar moving up today? Anyone? Anyone play the Jeopardy music in the background? The answer is because of what I just said. The market is realizing QE2 is going to come to an end. QE3 is unlikely. Therefore, the dollar printing, the printing of money, the dilution will start to stall out. Therefore, that's a good thing for the dollar now, believe it or not, at least in the short run. Now, ultimately, the dollar's going down lower, folks, because there's been so much printing of money. But in the short run, anyways, the markets are now realizing QE2 is going, to end, and then that's it. And then obviously we see the dollar gaining strength because of it. So it all makes sense. It's a piece of a puzzle. You put all the puzzle together, and it's telling you exactly why the markets are doing what they're doing today, why the dollar's doing what it's doing, why, again, gold and silver are pulling off their highs. Why are gold and silver pulling off their highs? Because the dollar's going up. All right? Makes sense. All right, and again, USO's in its own world. It's at the highs here of the day, but it's been in a choppy sideways range. And again, USO's in its own world based on the Middle East and what's going on there, obviously. All right. Taking a look at a couple different things, I happen to think that the UNG is pretty cheap down in these levels. Down here, just above the $5 level, that's Nat Gas. Nat Gas continues to be very, very inexpensive in my opinion. We're seeing weakness even in solar stocks today. There's really not a lot that's not weak on the FSLR. If this comes all the way down to the 200, that'll be your next level to watch. Even Chevron and Exxon have gone negative. These stocks were stronger all day long. They are now heading to the negative side on Chevron and Exxon, down 30 cents on the CVX. If we look at the intraday, you can see it opened strongly higher, but now has sold off, and that's bringing the markets in and keeping them under wraps. NASDAQ right now is down 57 points, guys. The volatility we've seen in this market has been fantastic. I can't stress that enough. Whether you're a swing trader or a day trader, the volatility is something you have to enjoy, and you do, or you should enjoy, because it adds to the profitable moves in the market. And bottom line, folks, that's what we're here for. We're here for moves in the market, keep it volatile, therefore we make more money, and again, just be on the right side of the trade. And if you use our techniques, our methodology, you will be. Join the research center, join the chat room, all right? All right, let's go over a couple other things, a couple other stocks today. Apple's getting punished, down $8 on the day. Look at this chart on Apple, folks. And I actually called out to the Research Center and the intraday stock chat last week. Let me just erase some of these lines. I said, guys, this 360 to 358 level is a major resistance right up here. Major resistance. Sure enough, it goes right there. And look at the $8 sell-off today on Apple Computer. Great drop there. Fantastic drop. All right, and again, as we were talking before, Amazon is continuing to get hit. Now, take a look at Amazon here. This is even more interesting for a couple reasons. Number one, draw the line right here. Look at what Amazon's doing today. Amazon is hitting a double bottom. Now, this double bottom is a little bit of support, but it's not unbelievably big support. It could easily be broken because, again, this was on the earnings drop, so it made a little bit of a pivot bottom, retraced to the pivot high, double top, retraced to the pivot bottom. Yes, that should be a 1 or 2 day support, but I think it does eventually break, and most likely Amazon's heading for this level at a pivot double bottom, and the 200 is right below that. That's your general target down there. All right, so again, there's a lot going on in this market. A lot. I can't stress that enough. Google's down 13 bucks. Baidu's down $4.30. Big drop on Intel, down 48 cents, down 2.25%. You name it, it's falling today. Cisco Systems, take a look. Cisco Systems is getting closer to a long target area. Where do I like Cisco Systems? I like it right down here. This pivot double bottom right here. And again, that's at $17.75. There I finally start to like it on the long side for a little bit of a bounce. It's still about 30 cents away from that at this point, but nonetheless, that would be cheap enough where I would start to get interested on the CSCO. All right, lots of good happenings, guys. And you have to love the volatility because this is what it's giving us. It's giving us these type of moves. And again, the dollar continues to trade at the highs of the day. We called that pivot low beautifully. With gold and silver have reversed a little. Let's take a look at the GLD. GLD's coming in, continuing to see a little bit of selling here. Very nice little selling. And even the SLV, same thing. SLV's come off. That's a bear flag. Look at that bear flag right there underneath the 20. It sells off. I still think you have a good chance of going to this 50 moving average, but we will keep a close eye on that as well. All right. I think that's about it today, folks. Just so much going on. Got to get back to the chat. I got to get back to the research center. And again, I encourage you to join both. Take the free trial. Join us here at In the Money Stocks and start making some money. Take care.